Hello traders, we're continuing our discussion of the higher time frames, and we're going to look at first red day, ACB, and all-in opportunities, and coming back to just repeating the higher time frame, understanding that when a monthly candle is printing, we can look for the bias but the opportunities at the extremes. When a new month begins, we're either inside a previous monthly level and the market is breaking out, or we're trading back inside of a range in either a down closing month or an up closing month. And we can form our thesis based on the previous monthly levels and how the new month opens. So if we're looking for a first red day opportunity, oftentimes traders are constantly looking for markets that are at the highs all the time, when we can be in a broken market and be picking easy money up off the floor in the corner just by sitting and waiting for that market to set up into a first red day or first green day opportunity. In this particular module, we're going to be focusing on first red days. Now, remember what I just said. Often traders are looking at markets all the time that are going higher to try and get a first red day, and they try to short something and it just keeps going higher. When realistically, what we want to be targeting is a market that is potentially printing our first red day and now has the potential to continue to drop even lower, maybe throughout the entire month before pulling back and closing as a down closing month. So instead of trying to catch the high, we're just actually selling. We might be selling a month, a first red day in a month that has traded up first, given us a first red day signal, and began to break down for the rest of the month heading into the close. And that's the objective, is the easy money. We're looking for the easy money all in that's going to continue to trade to the close. Repeating traders are often looking at stuff that are trading at all-time highs and they keep trying to short it and the market keeps going higher and they go, well, this doesn't work. The easy money could be just selling a market that is breaking down or has already been broken down, and we're looking for the follow-through for that market to continue to break down even further. And remembering, we're just looking at monthly cycle. The market opens, puts a high in place, gives us a first red day signal, and we can carry that bias throughout the month. This first red day could have come on non-farm payrolls, it could come on CPI, it could come on a major red news impact or no major red news at all and give us easy money. But instead of just trying to constantly sell something that's up high, be aware that markets that are breaking down or have already broken down can give us the easy first red day trade. Now, one of the things that I really want traders to get out of this module is, number one, the importance of the new month, new timing cycle, recognizing that when a new month starts, our opportunities all of a sudden start again for large potential moves. Now, with first red day, what I said just a moment ago about trying to constantly sell something that's up high, thinking that it's got a long ways to reverse, is reverse our thinking and look for markets that are breaking down, So we have our monthly extreme and we have a new first red day right at the beginning of a new month. But we also want to follow that market throughout the month to look for the easy follow-through opportunities. Because remember, some of these signal days may come off of high impact major red news. Non-farm payrolls, CPI, FOMC, Bank of Japan, whatever that may be for that individual currency or instrument. But as we follow that through, a broken down market is where traders can make a lot of easy money by following it through. And retail loves to just constantly try to counter trend. They're looking for a first green day in a market that's breaking down constantly and giving easy money. So that's the most important thing to understand, is that we can have markets that are in strong uptrends and be following them through with first green day opportunities. And we can have strong broken down markets in bear trends giving us easy money on the follow through, and remembering Monday, Wednesday, Friday timing. So we have markets that are breaking down from first red days and continuing to break down. And we can be picking up easy money laying in the corner just by following major pairs or cross rate pairs or indexes or metals, regardless of what that instrument is, based off of that bias that has already started from the beginning of a new month. Remember, the goal is to find markets that have the potential to go all in from the open of your session or from the session to the close of the day. We're not trying to counter trend markets and catch extremes. That's what retail does, and they get chopped up all the time. We're looking for markets that are going to collapse or explode from the coil, and on our higher time frame, even if it's just for a session trade, the easy money laying on the floor in the corner. All we have to do is sit and wait for that market, whether it's a Tuesday this week or a Wednesday next week or Friday, whatever the day that is. We're looking for the easy money. So if you hear me use the expression breaking down or broken, we're hunting instruments if we're looking for first red day opportunities that are broken. They continue to break down, whether that's from negative, high impact major red news or an event, whatever that is. If it's broken down and it continues to break down, there could be a lot of easy money laying on the floor in the corner. And just aligning our time frames. So remember, not worried about candles or chart reading. It's about understanding the time rotation. Currencies are 1 hour earlier than indexes, metals, and energies. They roll over at 5 p.m. New York time and continue to trade. So if we have an opportunity at one of the extremes in our session that we're trading, regardless if it's Asia, London, or New York, helping us understand the time rotation, entering into a coil on our smaller time frame allows us, number one, to manage our risk off the higher time frame. That's our worst case scenario, and often the 4-hour candle extreme or the 1-hour candle extreme will be very similar within a few pips. But this gives us our thesis heading into our 5-minute coil when we're about to enter into an opportunity in line with the higher time frame. So just going back to our daily, we had our first red day signal. And if we're looking for first red day, that follow through, remember the monthly cycle, open, high, low, close, we're targeting a market that gives us a signal day at the extreme. And with first red days, we can see continuous follow through in this example in a market that continues to break down. So rather than targeting markets that are at all-time highs or breaking higher and trying to catch the high, we're looking for the easy money where we can scale in and the market continues to collapse through the floor on range expansions in a downward direction. When we look at our 1-hour chart, we have the beginning of our new month. We have our first red day, and we had a market that closed in breakout on the Tuesday. New month, new timing cycle, and traders will get to our Monday. We have an inside day and a first green day. So we had a market that closed in breakout at the end of the month. We had our first red day, which was an inside day. We're up high with non-farm payrolls. So we have our high of month and low of month level once our first green day prints on the Monday. But following that through, now we have 1, 2, 3 days closing in breakout, heading back up to our high of month and first red day level. But I want traders also to pay particular attention to the price action as we close in breakout higher. We're outside of daily ranges. The market keeps lifting. So recognizing not necessarily, we're not looking for trades here. We're just understanding that we have a first red day at the high of the month. The market approaches the high of month again, heading into new week, new timing cycle, week 1, week 2. CPI on the calendar. CPI collapses and breaks down. So we talk about first bounce, first bar entries in the playbook, but the news can be a catalyst now. We have our high and low of the month in place. We have a first red day at the extreme, and now CPI has broken down in a market with 3 higher closes in breakout. All we're looking for is easy money, and the easy money can come once we have a market that establishes an underlying bias. And how do we know what that underlying bias is? Well, we have our signal days. We have high impact major red news now potentially showing us the backside of a month setting in. We've had our first red day signal. Now we have the collapse on high impact major red news on CPI. And now we're heading into the backside of the week, and we have our first red day signal from the high of the month holding in a new week, new timing cycle, a new first red day. Remember the understanding here. We're just coming to the screen at the end of the day, looking at the closes on the daily chart. We have our first red day signal. And if we step back and look at our daily chart, we have our high of month level and our most recent low of month level made at the beginning of November. We're hunting out markets that are potentially going to be breaking down, not just trying to catch the extreme. We're looking for markets that are weak and breaking down if we're going to be selling them. We're looking for markets that are strong and continue to head up if we want to buy them. So when we hunt these out, we're going to look at different opportunities that are in range-bound markets. We're going to look at markets that are potentially reversing off of extremes into a new month, new timing cycle. But hunting broken down markets with first red day follow-throughs is the object of this module. Whole point being shifting traders' thinking from trying to catch the high all the time to taking the easy money in a market that could be coiling into their session with an already underlying bias for a trending broken down first red day market. So we have our CPI collapse, and then we have a bullish close, an up candle close in a potentially broken down market, lower lows, a lower high. This is a Wednesday. Now this is an example of where we can get possibly an ACB opportunity in a market that hasn't closed in breakout, but it's closed at the high of the day after a market has broken down off the extreme, heading into our Thursday. We head into our Thursday, we're on our 1 hour time frame, and we have a market that continues to stay underneath of closing price. We're heading into our session, whether it's Asia, London, or New York. We're looking for a coil after our first red day signal in a market that has broken down from daily levels, made lower lows, and we're pumping back up into the extreme that was made from our CPI high impact major red news release. We head into our Thursday, we're on our 1 hour time frame, and we have a market that continues to stay underneath of closing price. We're heading into our session, whether it's Asia, London, or New York. We're looking for a coil after our first red day signal in a market that has broken down from daily levels, made lower lows, and we're pumping back up into the extreme that was made from our CPI high impact major red news release. And when we go to our 5-minute chart, remember I'm looking for markets that coil sideways. First red day, we want the coil, we want the sideways consolidation. That gives us a couple of things in our mind to confirm, and that is that we have the higher time frames rolling over. We're underneath of closing price. We're on the back side of the week. The market has put in a low and pumped up to closing price before breaking back down inside. We now have a market that is coiling, peak formation, and moving sideways into our coil, into our U.S. session timing window. There's 8:30 unemployment release on this particular day, and the market has already broken down, so we have an early entry opportunity in our coil to scale in. Now, once this market clears that level, being at break even, this is before the 8:30 news release, and this is where I say that on the back side of the week, we'll often see certain major red news act as a catalyst to accelerating away from the entry, and that forces retail to chase those moves. Now, traders can decide if they are willing to participate in that. Now, unemployment on the backside of the week, this isn't non-farm payrolls, it's not CPI, it's not FOMC. And so certain days, PPI, for example, I wouldn't position myself until after the release, but this is a perfectly engineered chart. So building the muscle memory on the understanding of what a perfect coil first red day opportunity looks like in a market now that may potentially continue to break down. And these are the easy trades. We have a market that broke down on CPI, made lower lows, lower highs, pumped back up into our first red day collapse, coiled sideways underneath of closing price. Entry, stop loss, take profit either at the extreme. We have, in this particular case with our currencies, we have major round number levels. So we have 50 as our level, but also the previous closing price, lowest closing price of that week as an area. But even just following through, once it auctions back and revisits the extreme, either trapping profits down low with a trailing stop or holding that till close. As I've said, you can make that decision on your own individually. In this particular case, this is an ACB opportunity, but it's a first red day trade, and I would be locking in the profits. The other easy way to do this is to just take the high-low of our range, our consolidation range, and targeting a 200% expansion as a take profit level, or trailing it through that 200% expansion as a take profit level. Let's go back and understand this again. We have a market that's broken down off of our first red day signal from the beginning of the month. Non-farm payrolls puts in our low of the month inside of a previous high and low of week level. We pump back up into the high of month. We break down on CPI. We make lower lows and pump back up into the extreme. This is the easy money. We pump back up into the peak formation extreme of the month. We get our first red day trade. And I want traders to understand that was an easy trade. Easy trade. We had our coil, we had a well-engineered chart, but we're still up high in a market now that can potentially continue to break down. Now, whether or not that gives us the trade in our session, we could come to the screen. It might have already moved, but we can follow this market now, and it can continue to give easy money. And in our session, if we just are patient and follow that through, even on a cross rate pairs, in this particular case, we're looking at the Japanese yen, US dollar, but we can be looking at other crosses of the US yen to see if we're seeing that same follow through and whether or not we get that opportunity in our session. Now, as we follow this through, remember closing price, Paul Tudor Jones, think of your entry point as last night's close. We have a market that has broken down and making a lower close after our first red day signal. We're into higher time frame selling. So we're looking at the 1 hour chart. So if you understand higher time frame, we already know our 4 hours down, our 1 hour's down. We're just continuing to follow this through. Traders who are aware and they have this on their list, it didn't close in breakout, but we have a market that's broken down now from a first red day signal. We want to be watching this regardless of the session that we're trading. We follow this through, and traders in London get a coil, a simple continuation trade, trend trade, a beautiful coil. We have our entry in our coil. We have our extreme for our stop loss. We're looking at 15 pips. We have our break-even level, and we have a potential measured move range expansion now targeting either 200% of that range, high-low range, or a hold till close mentality. In this particular case, again, it's a first red day trade. I would be taking the money. It's Friday. I would be targeting a 200% expansion on this pair. A beautiful first red day follow through just by following through in a market that continues to break down. First red day breaking down. We want to sell weakness in markets that continue to break down. And I want to repeat, keeping things really simple. Entry, stop loss, take profit. Not worrying about which little bar. Once we have our thesis in place and we have our coil, getting in, if you're scaling in, putting your stop loss in place, going to break even, and either walking away and letting that trade hit your target, or holding till close. But that's as simple as you can make it. Entry, stop loss, take profit. We have our coil, it's dummy proof. We have our coil, entry, stop loss, break even, and take profit. Keep it simple. We'll continue our study of first red days, but we'll break these videos into shorter 20 plus minute sort of versions so that traders can digest that, and we'll continue this in the next video, traders.